Bitcoin is right now trading back below the 200-day moving average. We've lost this level. Like we've mentioned in yesterday's video, this is one of the most important levels for Bitcoin right now. So what can we expect with Bitcoin in the near future? Then guys, there was another chart right here which was predicting that Bitcoin is going to see that drop after we got rejected from this resistance as well. I want to have a talk about that, and I want to show you guys why this correlation is still very clear. Then guys, I'm also going to show you this specific chart which is predicting that we are still going to see a major dump in the price of Bitcoin and that Bitcoin is not done with its correction yet. I'm going to talk about the likelihood of that scenario and which patterns, which levels you should need to watch in the price in order to check whether this is really happening or not. So guys, all about that in today's video. With that being said, my name is Jeroen. Welcome to the Blockchain Today, the channel where you subscribe for daily crypto videos. Right now, let's jump right into it, guys. And before we are jumping into it, make sure to scroll below this video, hit the thumbs up button. That is very much appreciated. Make sure to subscribe to the channel, hit the bell icon so you get notified whenever I upload a new video. And let me bring out the drawings right here. Boom. So yesterday, guys, I've been telling you that most likely we will get rejected at the 61.80% because the chances that we are breaking through such a key level the first time we're trying it is just very low, especially when we had already such a rally without a correction. It makes sense to get some resistance at this level and to not break it decisively. And yeah, what I said yesterday as well is that, yeah, of course, we are right now getting squeezed. We already broke that rising wedge formation, but we haven't seen that major volume coming in. We haven't seen that major correction or major reaction in the price. So I said, like, we are right now trading below the 200-day and the 61.80%. Breaking the 200-day is going to be a bearish sign. Is going to show us that Bitcoin is in a downtrend. We got multiple charts actually showing that this was going to happen, right? Like I've been talking about in my previous videos, we have the Bitcoin dominance where we have been predicting a bounce in, and normally when we are seeing a bounce in the Bitcoin dominance, that means that either Bitcoin is going to make a rally or Bitcoin is going to see a drop. Well, we are touching resistance 61.80%. It's not likely that we are going to see that rally right now. So that bounce in the Bitcoin dominance was predicting that the confidence will decrease and that liquidity will go to Bitcoin, which means that the price of Bitcoin is going to see lower levels. And that's actually what we have seen. Then we broke below the 200-day. So right now the bearish divergence on the daily time frame, guys, is also validated, where we have been during this formation, during this rising wedge formation, we have been setting higher highs in the price and we have been setting lower highs right here in the momentum indicator, the relative strength index. So right now I'm going to expect that Bitcoin just transitioned in a short term downtrend on the shorter term time frame, because on a weekly time frame, guys, we are still in an uptrend. Everything is still looking very good, but right here in the immediate short term time frame, it is possible that the 200-day is going to act as resistance and that Bitcoin is going to see lower levels and going to set a higher low somewhere, and afterwards can continue this uptrend. So the levels that I'm watching, this is very important, the levels that I'm watching right here on the daily time frame is of course the 50% Fibonacci level, which I'm expecting some form of a reaction. We have seen some significance with that level in the past. I think it's better visible on the 4-hour time frame. Yeah, we can see a lot of resemblance with this level right here. It has been acting as resistance, support. So I do expect some form of a reaction there, which will be at 43,600 approximately, but the more important level is definitely going to be the levels below right here, where 42,000 is going to be an important level, and the next Fibonacci level right here at 38.20%, which is slightly below 40,000 US dollars. But the reason why this one is so important, because this one is aligning with that lead in phase, the resistance right here, which has been acting as resistance right here as well, which should hold support if we want to continue this uptrend. That is very important. I think it is possible for Bitcoin to not even come down to this level, but and already set that higher low right here. and then continue that uptrend. I think that is possible, but of course it is also possible for Bitcoin to come down and test that trend line. We need to be prepared for both scenarios. When that is going to happen, like you can scale in already into your position right here, or you can scale in the moment we are touching this level, depending a little bit on your risk management and your strategy. However, if we were to lose that level, so a first signal could already be if we lose this support zone, and this support zone is acting as resistance. That could be already a first warning signal. But if we were to lose this trend line right here, the former resistance trend line, if we lose that one, then that would be actually very bearish, and that would increase the likelihood that Bitcoin is going to continue this downtrend. Because take in mind, guys, that getting rejected right now at the 61.80% is a warning signal for the Bitcoin price. Like the bulls, we are still expecting Bitcoin setting a high low and that we eventually can break this level. I still do favor this scenario. I still think that the signals right now in the chart are still pointing that Bitcoin is in is mid bull market, so that we can still continue this uptrend. But all signs, like a lot of signs right now, pointing to a short-term pullback, a short-term correction, which is healthy when we are seeing a normal uptrend. Bitcoin is never going in one straight line. We always go with ups and downs, right? So it makes sense to get a pullback before we can continue this uptrend. However, we have to be careful here as well, due to the fact that we got rejected at the 61.80%, which can be an argument that this bounce right here in the Bitcoin price was a retracement from this drop. So that is a possibility, guys. So these are the levels that I'm watching on the daily time frame. That is the 50% Fibonacci level at 43,600 approximately. Then we have the level of 42,000 is actually a support zone. Below that we got the 38.20%, slightly below 40,000. This one aligns with the former resistance. That is a dynamic number, so it depends where in time we are going to meet that level. That level will be slightly different, right? If we are going to reach it today, it will be different than if we will reach it in the coming days. So that is something to watch. So guys, let's have a look at the weekly time frame. Right on the weekly time frame, we can see that Bitcoin is still trading above the key moving average, the 21 weekly EMA and the 20-week moving average. These are going to be very important levels for us to determine how Bitcoin is looking in general, right? Because right now on the weekly time frame, we are still in an uptrend. We are trading above these key moving averages. However, if we are going to lose these levels, guys, then that can be a big problem, and that should be another warning signal showing us that we might see lower levels, and that the attempt of breakout right here on the weekly time frame eventually resulted in a failed attempt of breakout. So right now we got the first signal rejected by the 61.80%, but either way, when in the bullish or in the bearish scenario, it would make sense for Bitcoin to get rejected from this level. That's what I'm trying to say here. Right now we really have to see if we are going to see some follow through in Bitcoin's decline, and if we can lose the market structure that we are trading in right now. Then guys, I want to show you another chart, and before I'm going to show you that other chart, I quickly want to remind every single one of you that today is the last day you can claim your bonus over on the Bybit exchange. Today you still can claim a bonus of $1,610 if you use my sign up link down below to create your account over on Bybit, and to meet the deposit requirements, and to then you can claim your bonus. Then for the Femex exchange, guys, if you are interested in trading Bitcoin with margin or with on the spot market, you can do it both, either on the Bybit exchange or the Femex platform. Femex right now is arranging a bonus of $1,100, and this will go on till the end of this month. And if you are interested in one of these exchanges, you can find my affiliate links down below. Then guys, if you haven't done so already, make sure to drop a thumbs up down below. That is highly appreciated. Now let's dive into the other chart, and that is of course the S&P 500, because we have been talking about the S&P 500 quite often, but this is actually the chart which has been predicting the drop in the price of Bitcoin, because we have seen a attempt of breakout from this rising wedge formation. And like I've mentioned in my previous videos as well, guys, the likelihood that we are breaking out to the upside is actually quite small, due to the fact that that coming above, like right here, meeting this resistance, is coming along with this major bearish divergence, declining resistance on the relative strength index. So the chances that we are going to get rejected at the resistance are way higher than that we are pushing through the resistance. So yeah, eventually we can see we got rejected, we got that signal on the RSI, and so far the we lost the level again, and we came down approximately the same time that Bitcoin did that. So this is a very important chart to watch if you are analyzing Bitcoin as well, because there is, in the shorter term time frame, a very, very direct correlation between these two charts. Then guys, we are going to have a look at a more bearish chart right now, and that is going to be this one. This is the redistribution chart, and this one is shared by a trader over on Twitter, and he's saying when Bitcoin will crash, don't be surprised, and it's shared by trader Gbon. And what it's basically stating is that we have a we have a distribution phase right here, which was actually a textbook distribution. A lot of people were handling these patterns on their social media. We also have been talking about it right here on our YouTube channel, that this was a textbook distribution phase, and that right now we are entering a redistribution phase. That's what this pattern basically is saying, which means that right now we are getting rejected from that 200-day moving average, and that eventually will lead to a further drop in the Bitcoin price, where we can even drop below the lows of $29,000. So I want to have a talk about whether this is a realistic scenario or not. And first of all, I want to emphasize the fact, guys, that this is also a scenario you have to take into consideration, because normally people are either bullish or either bearish, and when you are bullish, you are looking for a lot of confirmation bias for bullish scenarios, and when you are bearish, you are looking for a lot of confirmation bias for bearish scenarios. But yeah, you shouldn't be either one of them. You shouldn't be a perma bull or a perma bear. You should be open to both scenarios, because that is a great attitude you can have towards the markets, because it will help you to make the right decisions when certain things are happening. Okay, so first of all, do I think this is the most likely scenario right now? No, I personally don't think that is the most likely scenario right now. We got a lot of other metrics, on-chain metrics, which are showing actually bullish signs for Bitcoin in the macro perspective. For example, we got negative funding rates, and we got that nice buy signal over on the hash ribbons, right? We can see that the Bitcoins being moved into strong hands is also increasing, which is bullish. So a lot of signals, guys, are out there which are pointing that Bitcoin is still looking bullish in the midterm perspective, right? However, I think we have to be aware of the fact right now that we are getting that rejection from that 61.80%, and we are right now trading below the 200-day moving average, which means that most likely in the coming days right here, we are going to see a short-term continuation of this downtrend, and we really want to see what Bitcoin is going to do next. Because if we were to get a weekly close below the 20-week moving average, or if we were to get a weekly close below the 21-week EMA, then that definitely increases the likelihood of Bitcoin to drop below the lows right here at approximately $29,000. So guys, how can we approach the market right now? Well, you can approach the market from multiple angles, and let me explain you some angles, right? First of all, you can use, for example, the 200-day moving average as a deterministic moving average right here on the daily time frame, which means that as long as this level is acting as resistance, you are going to lower your risk and you are going to hedge against the potential scenario that we are going to see that further drop. And then eventually you can see how Bitcoin is going to react at these levels. But you could also say, like, okay, the moment Bitcoin is breaking back above the 200-day moving average, that is the moment I'm going to enter my position with Bitcoin again, because I'm more confident about Bitcoin continuing this uptrend, right? Another key moving average you can use is of course the moving averages on the weekly time frame. You can use the 20-week moving average, or you can use the 21-week EMA, where if we were to get a weekly close below one of these levels, you could say, okay, that is the moment I'm going to hedge into stable coins. I'm going to protect my portfolio right against this scenario that we might see Bitcoin dropping below these lows right here. So guys, that could be a strategy as well, that you use these weekly key moving averages to determine whether you think Bitcoin is looking bullish or bearish. I do think right now it makes quite sense for Bitcoin to get rejected from the 61.80%, but it also shows us that we still, this uptrend still could be a retracement and of this bigger down move, and that eventually we are going to sweep the lows right here. Like I said, guys, I don't think this is the likeliest scenario right now. However, I do think it is important to consider this, and I think myself, the most important signals that I'm watching are the key moving average on the weekly time frame. If we were to get a weekly close below one of these key moving averages, then we had a failed attempt of breakout on the weekly time frame. It shows that on the weekly time frame we are going back into a downtrend, so that would be a very bearish signal, and I think that would be a good signal to use as a deterministic signal whether we are going to continue up from here or whether we are going to continue down. And it might be possible that we are going to come down and eventually we are reversing back up again. So you might lose a little bit on your position if you sell once we are breaking below a key moving average and you enter again once we're breaking back above it. However, you have a clear level you can use whether you to choose whether you want to be in or out a position, and your entry might be slightly worse, but your risk is very, very much lower than if you would just assume that one of these two scenarios is going to play out. So guys, that is my 2 cents right here. I think right now Bitcoin, if we want to look bullish, Bitcoin really has to reclaim the 200-day moving average. It makes more sense. It's more likely right now that the 200-day moving average is going to act as resistance. We want to see Bitcoin. We want to see how Bitcoin is going to react at these levels. Is Bitcoin going to set a higher low right here? Are we going to see a reversal pattern? That would be very bullish. That could also be a reason to enter the Bitcoin price right here. However, if we are going to lose more key levels, so we are going to lose 42, we are going to lose the this trend line right here, then the chances increase that we are going to break below these lows as well. And do take in mind, guys, that for the weekly time frame, it is very important to get a weekly close below key levels before confirming anything, because we have seen in the past that Bitcoin's price is slightly in a short amount of time trading below the key moving averages on the weekly time frame, but quite quickly is being bought up again. And let me quickly show you one example to just show you how that looks like. So right here we can see that the price of Bitcoin came below the 20-week moving average, but already got quickly bought up right here. And eventually we didn't got that weekly close below this level, right? We just get that wick. And normally when we are getting a weekly close below such a key moving average, then most of the time we at least come down to backtest this level as resistance. So guys, that is something to take in mind. That was it for today's analysis, guys. I hope you all enjoyed it. If so, make sure to scroll below this video, hit the thumbs up button. Very much appreciated, guys. For every single one of you who don't have an account over on Bybit or Femix, you can find my affiliate links down below. And for Bybit, you only have today to claim this major bonus of $1,610 using my affiliate link down below, and you have to meet the deposit requirements. And for the Femix exchange, you still can get a bonus of $1,100 till the end of this month if you use my affiliate link down to sign up. Then guys, I want to wish every single one of you an amazing day today, and I hope to see every single one of you in the next video.